When people think of financial traps, they usually imagine credit card debt or payday loans. But there's another, more terrifying creature in the financial world: Frankenstein loans. Like the monster from Mary Shelley's classic story, these loans are stitched together from confusing parts, designed to look alive and helpful on the surface. But in reality, they turn into a nightmare that refuses to die. Frankenstein loans are loans built from multiple hidden fees, balloon payments, confusing interest structures, and shifting terms. They look like a normal loan at first, but once you're inside, you realize the pieces don't fit together in your favor. They're stitched to trap you. They often start as too good to be true deals. Maybe it's a loan with low monthly payments or a mortgage advertised with flexible terms. But in reality, those payments rise, the interest compounds, and the debt grows larger and larger, just like a monster you can't control. They hide across the financial world. In the housing market, they appear as subprime mortgages with teaser rates that explode after a year or two, trapping families in homes they can't afford. Some even include balloon payments, huge lump sums due at the end of the loan that borrowers never saw coming. In personal lending, Frankenstein loans show up as payday loan rollovers, where fees keep getting added each time you extend the loan. Borrowers end up paying back several times more than they borrowed in the first place. Credit cards sometimes play the role of Frankenstein too, with deferred interest loans on big purchases. They promise 0% interest for 12 months. But if you don't pay off the entire balance by the deadline, they hit you with all the interest retroactively. Even student loans can carry Frankenstein-like features, with complex interest structures, capitalization of unpaid interest, and multiple repayment plans that make it nearly impossible to predict how much you owe in the long run. The reason these loans exist is simple: profit and predation. Lenders know that borrowers focus on the shiny part of the deal: the low monthly payment, the 0% teaser rate, or the easy approval. Behind the scenes, however, lenders build loans like Frankenstein's monster, stitching together fees, clauses, and payment traps. The goal isn't to help you, it's to keep you paying for as long as possible. This strategy works because most people don't read the fine print or don't fully understand the complex terms. Financial institutions exploit that, knowing they'll make more money from your confusion. At first, Frankenstein loans feel manageable. The monthly payment seems small, the interest looks fair, or the promotional deal feels like a lifesaver. But over time, the monster reveals itself. A family might take on an adjustable rate mortgage only to see their payment double after a year. A payday borrower may roll over the loan 5 or 6 times, turning a $500 loan into $2,500 of debt. A student loan borrower may pause payments only to find the unpaid interest added to the principal, growing the monster bigger. The worst part is psychological. Frankenstein loans make people feel like they're drowning with no escape. The debt keeps growing, and no matter how much you pay, the monster always seems alive. You can recognize Frankenstein loans by looking for red flags. If a loan sounds too good to be true, it probably is. Loans with teaser or adjustable rates that rise sharply after a short period, balloon payments hidden at the end of the term, complicated fine print with multiple fees, deferred interest offers that add a huge bill later, or high rollover fees that encourage you to keep extending the loan are all signs of danger. If a lender can't explain the loan in simple terms, it's likely stitched together to confuse you. The best way to fight Frankenstein loans is through knowledge and vigilance. Before signing any loan, ask yourself if you fully understand every fee, every interest rule, and every penalty. If the answer is no, don't sign. Shop around for lenders who offer transparency. Many credit unions and reputable banks offer simpler loans without hidden traps. Online loan comparison tools can also help you see the true cost side by side. If you're already in a Frankenstein loan, you may have options. Refinancing into a simpler, lower interest loan can cut off the monster before it grows. Nonprofit credit counselors can also help you untangle complex loan terms and find better repayment options. Frankenstein loans are financial monsters stitched together by lenders to look attractive at first, but built to drain you in the long run. They thrive on confusion, hidden terms, and desperation. But once you know how to spot them, you don't have to fear them. By staying informed, asking the right questions, and refusing to sign onto something you don't fully understand, you take away their power. The monster isn't unbeatable. It only survives in the shadows of confusion. Shine a light on it and you can take control of your financial future.